Hello, everyone. I'm Major Garrett in Washington. Tonight on America Decides, President Trump's tariff announcement, about 48 hours old. And from the stock market to the supermarket, Americans are reacting with some variation of ouch. Stocks plunge for a second day in a row. The Dow down 2,200 points. The S&P 500 and Nasdaq indexes have had the worst back-to-back drops since 2020. Beyond 401ks and savings plans, economists fear prices at the grocery store will also climb and probably climb quickly. Why? Well, one reason is the United States imports more food products than it exports. Today, in retaliation to announced tariffs by President Trump, China imposed a 34% reciprocal tariff on nearly all goods China imports from the United States. This move is poised to cause a significant reset of foreign relations between the two countries and could quite possibly worsen trade tensions between the two largest economies in the world. Today, Secretary of State Marco Rubio defended the president's actions as global markets crashed.
Once they know what the rules are, they will adjust to those rules. So I don't think it's fair to say economies are crashing. Markets are crashing because markets are based on the stock value of companies who today are embedded in modes of production that are bad for the United States.
So what are the rules? Well, they're mixed messages from the president, and they're not exactly helping. This was the president on Air Force One yesterday.
The tariffs give us great power to negotiate. The operation's over, and now we let it settle in. You see the plants are starting to construction already. We have many plants.
So are we settling in or are we negotiating? Well, I want to begin tonight with Gómez, who's here at the desk with me, but I want to start with Kelly O'Grady in New York. Kelly, always great to see you. You've been such an enormously important part of explaining this week to our audience. Help them understand in context what this has meant for people who possess, as tens of millions of Americans do, mutual funds, 401ks, some kind of stock-based savings or investment program.
Well, Major, thank you for those kind words. I really do appreciate it. But look, this has been really tough. So I would say don't look at your 401k right now. And I don't downplay the situation that folks who are looking to retire in a year are in. But the S&P 500 really told the story today of what drove those 401k, mutual funds and savings down. So you can see right there on the screen, it was down 6%. We are nearing bear market territory. That's when you drop 20% from a recent high. But to put it in dollars, the S&P 500, Major, over the past 2 days has shed over $5 trillion in value. Okay, that is the worst that we have seen since COVID. And so much of our 401ks are invested in funds that track the S&P 500, are invested in those big tech stocks like NVIDIA, and those were really down today.
Kelly, I want to play for you remarks I know you scrutinized carefully. The Federal Reserve Chairman Jerome Powell talking about what this announcement meant this week earlier from the White House about tariffs and their downstream effects. Let's listen.
While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of the economic effects, which will include higher inflation and slower growth.
Higher inflation, slower growth. Not good terms.
No, higher inflation and slower growth equals stagflation, which is, in fact, worse than a recession. Now, Chair Jerome Powell, of course, is not saying that we are going into a recession. In fact, he said that we are in a strong economic standpoint right now. We had a great jobs report today. However, what he's talking about is the impact these tariffs will have, not just on prices, but on global economic activity. And in fact, you really saw this in the price of oil today. It reached the lowest level since April of 2021 during the COVID pandemic, when economic activity, production, things that you need power and oil and energy for, were down. And so what that tells you is Powell investors think that we could be in a slowdown. Now, are they right? No, we haven't seen that in the data yet, but it's the fear that that might happen, Major.
Kelly, stay with us. Finn, I want to talk to you about reporting you've done today. What is the fear factor, if you will, within the White House, or the it's going to be okay, just hold tight? The president on social media said today it's already working. The jobs report is good. Hang tight, everybody.
Yeah, so publicly we are seeing that. We are hearing that from the president, even saying on China that they played it wrong, they panicked. The one thing they cannot afford to do. They were surprised by the the amount of the retaliatory tariffs, that 34%, right? They did expect it. They didn't expect it to be that high.
To be China, to be that aggressive.
That aggressive and that quickly. The other thing that I have been hearing from sources close to the administration, sources in the administration, is that there could be a political backlash to tariffs and the market's reaction here. They could cause, what someone told me, it could cause a backlash that it can potentially not recover from politically. We are hearing from some Republicans on the Hill, lawmakers who are even more skittish than what they're saying in public. And that one source close to the administration told me that there could be politically a big break later in the year if this continues. So,
is that political sensitivity, Finn, about what's happening in the stock market, or what they fear might be starting to show up in sticker prices for automobiles, furniture, textiles, groceries, and the like?
Across the board, Major. But
okay, both.
Absolutely both. And it's not just impacting those with the 401ks. It's affecting those that he's attempting to help here, right? And the fear factor component that you mentioned is that that the base voter, the base supporter of the president, that it could affect them, and in the long run, it could affect the party's chances at retaining power.
Kelly, I want to go back to you on this point because you mentioned the jobs report. The Fed chair talked about that. That is one of the things that people refer to as the underlying fundamentals, and we don't want to obscure or ignore that. Also, interest rates were down, which could be positive if you're in the market for a home. So there are other parts of this story that have some life to them, if you will.
Absolutely. I mean, the fact that we had more than 100,000 jobs added than we expected, and in sectors like healthcare and transportation and retail, that was really strong. And so, the White House did tout that and said, look, the fundamentals are there. I think what's going to be really interesting, Major, is next week we are going to get an inflation report, CPI. It tracks the prices of what consumers pay. And then we're going to get producer prices the day after, the prices that businesses pay. Are we going to see some of the tariffs that have already been in place thread through that? The prices that businesses pay are what get passed on to the consumer eventually. And so right now, yes, good jobs report, but it's a question of when does this show up in the data? Because maybe businesses won't pass as much on and consumers won't have to pay as much high prices. And that, I think, is what the administration is saying is just wait and see. Major, I wait and see for the data.
Indeed, indeed. Finn, back to you, because you're talking about a political backlash that could come late spring, early summer. You and I know what that calendar dictates. That calendar dictates that's right in the middle of when Republicans will be trying to handle everything else on taxes and spending cuts. And if the politics start to get wobbly for the president then, that may prove troublesome.
In some serious political ramifications. Look, there are two significant gubernatorial races that are coming up this fall. We're heading right into the midterm cycle just a few months after that. I mean, we're there
right, but even before
now.
that, they're going to have to be voting and deciding on what taxes to cut,
right,
what spending to cut, and all those things, which they have so far kind of papered over and saved for another day. Well, that other day is going to come, and it might come when there's this political blowback.
No, absolutely, and some predict, and I heard this today. That there could be some within the close to the administration who's saying that they're predicting there could be a recession as early as Q3. The R word,
third quarter of this year.
Yes.
Recession possibly.
Right. I mean, that's some of the chatter that they're already discussing.
Some of the internal anxiety at the White House.
Exactly. That could have an impact. Yes, when these big decisions are being made. Yes, when the president needs that Republican unity to make these, to pass this legislation that he needs. Look, we're early on. Mm-hmm. Obviously, we're all the way, and we can't predict what happens in the summer. But if those close to the administration, within the administration, are already saying these words, it should be a cautionary tale for this administration, for the White House.
Because they're looking at the data, too. We're all looking at the data.
Sure.
Finn Gómez, Kelly O'Grady, as always, thanks so very much.